Fulton stock is down 12.5% in the past 2 years. However, the Intrendias Terminal is up 6.8% based on the volume breakout algorithm. Even with a declining stock, the algorithm is able to find successful entries and exits. The most recent signal was a sell on January 31st, thus far proving correct, as the once $16 stock is down to $15. However, is Fulton going to turn around? Let's look into the technicals and fundamentals to decide. Fulton stock is approaching the EMA 128 line, a popular line used as potential support for a stock. The volume breakout algorithm is able to automatically find key support and resistance price levels shown in the white horizontal lines. A price level meets perfectly with the EMA 128 line, furthering the support. In TradingView, I see a popular bullish continuation chart pattern called the Falling Wedge, where the stock comes from below and declines through a channel that gradually gets thinner before a bullish breakout occurs. This breakout to the upside could occur once the stock meets the EMA 128 line shown in blue. Next, I'm adding the Fibonacci Retracement tool, which helps us see potential levels of support and resistance in a price trend. Traders use Fibonacci retracements to identify potential reversal points or areas where the price may pause or reverse its direction within a larger trend. To use the fib, start from the recent lowest reversal point and drag until the recent peak. We can see that the EMA 128 line is in the golden zone between the fib 0.382 and 0.618. Not only that, we have a previous resistance line going right through this zone, adding more potential of a bounce to the upside. Finally, I have the volume weighted average price, or VWAP, starting at the recent lowest reversal point. It is a trading indicator that represents the average price a security has traded throughout the day, weighted by the volume of shares traded at each price level. Traders often use the VWAP to determine whether the current price is above or below the average price, which can help inform trading decisions. We want to see this VWAP arrive into the golden zone just like the support resistance level and the EMA 128 line. Finally, to zoom out, we see a larger trend to the upside occurring for Fulton stock since May 2023. To review, we have Fulton stock in a falling wedge, a bullish continuation pattern. Fulton is also in potential position for a bounce back based on the Fibonacci retracement tool. The stock price is approaching the golden zone where massive support through the EMA 128, VWAP, previous resistance level all converge into the golden zone. As far as these technicals go, Fulton is in a good position for a push back to the upside to around 1750. Now let's jump into the fundamentals. Fulton experienced great rise in interest income as the Fed rate rose in 2022 from 0.08% to 5.33%. The interest income rose from $173 million in March 2022 to $338 million at end of year 2023. However, this rise in Fed rate also comes with higher costs as banks face difficulty attracting new deposits and increased competition to attract new deposits through higher interest rates that benefit the customer. Interest expenses increased almost 11 times from $11.7 million to $126 million. So even if more income from interest is being generated thanks to higher rates on loans, Fulton is experiencing a decline in net interest income, with the peak being $225.9 million at end of year 2022 and end of year 2023 declining to $212 million. Speaking of higher rates, these higher interest rates make it more expensive to borrow, which decreases the number of new originated loans as customers are de-incentivized to borrow right now in this economy. Fulton had 18.2 billion in net loans in quarter 1 2022, but this growth has stalled and the curve has flattened to 21 billion in quarter 4 end of year 2023. Simultaneously, total deposits have been steady and flat throughout all of 2022 and 2023. Good news here though that Fulton is able to maintain their deposits even in a high interest rate environment. Fulton has 21.5 billion in deposits. Higher rates also increase the potential of greater delinquencies and charge-offs as customers are unable to afford higher rates. I see allowance for loan losses rise from 243 million to 292 or 3 million. Allowance for loan loss, or ALL, is an accounting term used in banking to represent the estimated amount of loans in a bank's portfolio that may default and therefore go unpaid. This allowance is set aside by the bank to cover potential losses from these defaulted loans. Banks are required to estimate the expected losses from their loan portfolio based on factors such as historical data, economic conditions, industry trends, and the creditworthiness of borrowers. The allowance is then deducted from the total value of loans on the balance sheet to reflect a more realistic valuation of the loans. So this could be a bad omen discussing the economic conditions that we could be facing in the near future. Let's talk about the charts. Market cap in orange follows the return on equity percentage in blue quite well. Personally, I prefer to see ROE near 20%. If we see the ROE continue to decline, then we could see market cap decline with it. Similar to ROE, net income has declined since mid-2023. One day, with the Fed slashing rates, we could see net income rise once again. However, since it seems like the Fed will keep rates higher for longer after the December jobs report showed hotter numbers of jobs added than expected, around 350,000 plus. And the most recent CPI inflation rate number was also higher than expected. For the meanwhile, we could see net income continue to decline along with the market cap. The market cap to free cash flow, or price to free cash flow, is a ratio that I typically calculate. The price to free cash flow, or P over FCF, is a financial metric used to evaluate the valuation of a company's stock relative to its free cash flow. Free cash flow represents the cash generated by a company's operations after accounting for capital expenditures necessary to maintain or expand its asset base. We see market cap slightly fall overall while the free cash flow has been rising since March 2022. When calculating the ratio, we see that the current price to free cash flow is below the stock's 2-year average, which could signal that the stock is undervalued. Ultimately, for me, I am happy with Fulton stock. The fundamentals do show some headwinds ahead as interest rates are here for longer, causing the efficiency ratio and net income to take a hit. However, the price to free cash flow does signal a buying opportunity as the current ratio is lower compared to the 2-year average. Moreover, for short and medium term, the technicals is in position for a nice bounce to the upside because of the EMA 128 line, the previous resistance line acting as support next, the VWAP line all converging into the Fib golden zone. I personally do have shares in Fulton. Even if the stock declines, I will be happily collecting the dividends along the way. Let me know what you think about Fulton stock and bank stocks in general in the comments down below. I'd love to hear your thoughts. If you enjoyed this coverage, make sure to like and subscribe. This very much helps out the channel, and I appreciate each and every one of you. Check out Intrendias.com for free buy and sell signals for your favorite stocks, cryptos, and ETFs in the Intrendias Terminal. Do you want to build your own trading algorithm? Great. Then check out my Python tutorial videos on my Intrendias channel. Thank you for watching and subscribing, and I will see you in the next one. Happy trading.